Assalamualaikum and hi everyone. We are from Bunga Group. We will be presenting the story of Patin case. This presentation comprises summary the story of Patin, difference between accounting cycle and operating cycle, steps of the operating cycle and accounting cycle, and the last one is the conclusion for this case. Without further ado, let's start with the summary of the story of Patin. Now, let's look at the story of Patin. Mr. Shah inherited a business of rearing patin fish from his father. The demand of patin was increasing by 2016 and the supply was adequate for local market. Since then, villagers started to involve in farming business, lead to more competitive. Shah pondered upon the sustainability of his business in this vigorous competitive. Shah was informed about the opportunity of funding offered by local authority to patin farmers. He was delighted to submit the application for the offer. However, the application must be supported with proper accounting record. He was bothered as there was no proper record of his business. Plus, he has lack of knowledge in preparing it. The application is supposed to be submitted within 2 months, but he only has 2 weeks before the deadline. So, Shah was planning to seek help from his nephew, Sabri, who was an accounting graduate, to prepare accounting record for his patin farm business. Before Shah could prepare a proper financial statement, he needs to fully understand about the accounting cycle and operating cycle. Next, I will pass to Aifa to present more about the difference between accounting cycle and operating cycle.
Thank you, Shahira. Now I will explain the difference between accounting cycle and also operating cycle. Accounting cycle is defined as process of identifying, analyzing, and recording all financial transactions of a company that involve to be presented in financial statements, while operating cycle is a period of time needed for a company to generate cash. The second aspect that I want to highlight is focus. As for accounting cycle, it focuses on all its financial transactions. The first step of accounting cycle is when a transaction occurs. For example, Shah bought a fish pellet and also seeds as a raw materials to breed the fishes until the fish can be sold. While operating cycle focus on the movement of inventory, which starts from purchasing, processing, and until it can be sold to customers. For example, Patin's operating cycle starts when Shah bought fish seed, pellets, cages, and related things to produce goods and services until Shah delivers the fishes to the retailers and also loyal customers and receive cash eventually. The third aspect is length of time. The length of time in accounting cycle is depending on how the company wanted to track its financial information. It is a series of steps that are carried out during accounting period to recognize all transactions occurred in the company. Generally, accounting period comprises of 12 months, but again, it depends on the company policy itself. So, for example, in patin cases, we suggest that the period for Shah business is 12 months, which is equivalent to 1 year. For operating cycle, it depends on when the inventories are received until it is sold. It indicates length of time when company buys inventories, produce it or convert it into goods and services, and collect the account receivable for revenue from the sales made. For example, Shah business operating cycle starts when he bought fish seeds, pellets, cages, and related things until it can be sold to customer. The estimated operating cycle for his business is twice a year, as patin fishes can only be harvested 6 months once in a 6 months. The last aspect that I wanted to highlight is number of steps in each cycle. Accounting cycle has 8 steps, while operating cycle has 5 steps. Now, these steps will be explained by my friends, which are Bella and also Rosa. Thank you.
There are 8 steps in the accounting cycle, which is the first step is identify the business transaction. This includes any transaction that occur within 1 year of the accounting period. For example, Shah should identify any transaction related to patin fish like purchase seed from the supplier until it is sold to customer. The next step is record the transaction to journal entries. Shah should record all transactions into appropriate journal entries. For example, transaction of sales of Patin fish, which is debit cash or account receivable and credit sales. The third step, which is post it to general ledger. All the journal entries like sales are then posted to general ledger where a summary of a transaction to individual account can be seen. The next step, which is prepare trial balance. In this step, the trial balance proves that the amount of debit and credits are balanced to each other. For example, the total sales is calculated at the end of the accounting period and transferred to the trial balance. If the sum of the debit entries in the trial balance doesn't equal the sum of the credit, that means there is been an error. Therefore, Sabri should find error and mistakes and make a corrective adjustment. The next step, which is adjusted journal entries. Adjusted journal entries made at the end of the accounting period that allocate income and expense to their proper period. Therefore, Sabri need to do adjustment for accrual account that might occur in the business. The next step, which is prepare financial statement. When the account already updated, the financial statement can now be prepared. A complete set of financial statement consists of statement of other comprehensive income, statement of financial position, and any related statement. For example, the sales amount will be forwarded to the statement of comprehensive income. And the last step, which is closing the book account. The process of closing the temporary account is often referred to as closing the books. If an account is not closed correctly, the beginning balance for the next month may be incorrect. For example, the sale account are closed out for the next accounting period. That's all from me. Now I will pass to Nabila to continue the presentation.
Thank you, Rozalia. I will be present about the process of operating cycle in this case study. We have 5 processes. The first process is purchasing raw materials from the suppliers. Shah bought the seeds from breeder in Lanchang. He also needs to buy pellets and cages to breed Patin fishes. He needs to pay 100 ringgit monthly. The second process is the producing goods or services. Shah will feed the fishes twice a day with pellets only, as the quality of patins need to be maintained. Shah also needs to pay for his 4 workers, as they had done the maintenance work. The third process is the finished goods or services are sold. Shah will sell patin for his loyal customers, wholesalers or retailers. The fourth process, issue receivables with billed to customers. Shah's business was done on cash basis. And our last process is collect cash from the customers. Shah will bank in all cash received from his customers into his savings account and will be used for his family expenditures and to purchase raw materials. So this is not our last presenter. I will be passed to Shahira Jamaluddin.
In conclusion, identifying accounting cycle and operating cycle is important for business entity. This is because in accounting cycle, we will record all the transaction occurs. For example, as Patin sells in a cash basis, Shah will bank in all the money received from the sales into the bank. The money will also be used for his family expenses. By having proper accounting cycle, Shah could differentiate the business and the personal expenses from the operating and accounting cycle. Meanwhile, operating cycle will ease financial planning and controlling business resources for the entity. For example, by recording monthly sales, Shah will be able to forecast which month Patin fish have highest sales. Hence, Shah can buy more fish seeds 6 months before the highest month arrive. Let's say the highest sales is on every January, so Shah will need to buy extra fish seeds on June, as the fish can be harvested after 6 months. Not only Shah can fulfill customers' demand, but he also can increase this business sales. That's all for us. Thank you.